April lean hogs were down sharply after notching new contract highs yesterday. In fact, yesterday was a gap higher open and really off to the races. Now, we took that back and then some here today after we filled the gap that it left on that gap higher open yesterday. That gap was 93.02 to 93.32, went down, filled that gap today. So the question is going to be for your technical traders, is this just normal back and fill the gap activity? Gaps are meant to be filled is a saying that traders like to use. And then are we going to resume going higher? Was it just sort of bookkeeping and cleaning up that gap? Or is this an indication of a blow off top? And to be honest, I have no idea. I'm very curious myself. But it has been a rather volatile last couple days in the lean hogs market. Pork cutout values might have something to do with that. They did simmer down a little bit. They were down about 80 cents after the close yesterday. But they're still seasonably high for this time frame. That's suggesting that we have some really rather good domestic demand. We have seen some pretty solid export demand as well. However, this week, our weekly export sales figure showed a bit of a slowdown. Still not a terrible number at 24,900 metric tons, but that's less than half of what we saw the week before at 50,700 metric tons. So a big slowdown from one week to the next. Now, some of the typical players were certainly on there. Japan and Mexico, these are our two of our biggest clients. So it's good to see them on there, but notably absent was any sales to China, and the market doesn't like to see that. So yeah, it's been rather volatile the last couple of days. Very curious to see how this chart plays out here going forward. So in the meantime, stay tuned, everybody, and you stay safe.